Well, good morning, you all. While Jack is pulling up those slides, because I just kind of switched the format last minute on him, I will go ahead and give the opening. It is very good to see everybody, even if virtually, and I know we can only see a few people on the screen at any given time. But there is, under the three dots, a way to select large gallery format. It says, yeah, large gallery, and that will allow you to see a few more than the standard 12 or 9. So thank you for joining us. We have had a few questions over the past few months about whether or not this event will return to the Cobb Galleria, or or if we will continue to do it remotely over the next few years. DCA definitely sees value in both forums. There is a lot of fun to be had meeting at Cobb Galleria in like a family reunion type style. As of today, I don't think we can answer how we will handle things later this year or even next year, but do know it is on our radar. We do look forward to a lively and engaging dialogue with everyone today. I do have some administrative things in my notes, Jack, and I'm probably duplicating some of your slides. So we understand that there will be many hot topics in which you might want to participate, and you're only one person and can only be in one place at one time. So we are recording the sessions. You will be able to access them afterwards. If we do not sufficiently answer your questions, let us know and we will make sure to include it in the Q&A. And or if a DCA staff member speaks incorrectly about a topic, we will correct it in a dedicated section of the Q&A after the workshop. I also, on a personal note, want to say thank you to everybody for all of the support that I've received since October. As you probably can imagine, I am probably running on adrenaline mostly and fumes, but I am doing well and coping. I probably should apologize to the DCA staff because I'm likely running them ragged with my frenzied nature right nowadays. But with that said, it is true that I am leaving the agency within the next, I would say, 45, 60 days. My desire during this time frame is to staff up because, as you know, we have quite a few vacancies right now. So that is my primary goal within the next few months, to staff up and to make operations even more efficient. But I thank you all for all of the love, support that you've shown. Jack?
Great. Thank you very much, Jill. I will pull up some slides. Please confirm that you can see slides. Great. All right. So welcome to the 22 QAP workshop. Just going to open up, giving a sense for what the flow of the workshop is going to look like. And we do several slides, including ones in the opening. Good for clarifying what was discussed, and for those who will reference the slides on the website. But I will go through some of these a bit more quickly, because we do, in compiling slides, things from different teams, there's a fair amount to cover. So the opening presentations may bleed over into the last part of the today's session. So I will not speak entirely on every bullet of some of these slides. So we'll be opening up with DCA presentations. We will then be doing Q&A for any of those along the way. And then at our hour and 15 later, 11:15, we will take a break and pivot to the virtual stations. This will be equivalent to, for those who have attended in person, when we just have different tables set around the room and want to talk to the compliance team about something specific, you can touch base with them. Over the same time period, you can jump and go to another table related to scoring topics. And you can pop in and out of those stations as often as you want. And as Jill said, those will be recorded. So then at the when we come back and reconvene in a large group setting, we'll be reporting back and discussing key themes and any additional Q&A from those small group discussions. But like I said, depending on the timing, we may have some of these presentations picking up again after those breaks as well. And I realized, just setting the table, I will occasionally need to mute everybody. So I will do so right now, rather than opening that. Great. I have muted everyone. So we'll need to do that every now and again. We do that so that at baseline, it's easy for people to participate. But of course, as some people may not realize, answering the phone and don't realize they're unmuted, etc., may jump in and do that. So if you speak, we'll let you know I'll let you know every time I've done that. But on that, this PDF, if you navigated here, then you've gotten to the all attendees opening session just fine. For the virtual stations, you should see on the following pages all the different links to be able and phone numbers to jump in and out of those. And then at the bottom of the document, again, to bump back into the all attendees discussion afterwards with 15-minute breaks in between. And if at any point you have any issues, feel free to email hfdround@dca.ga.gov. You have people monitoring that email and responding to help people out with accessing any sessions. So this will be more to, I will skip over at a high level. These are not intended to cover all of the QAP changes. This is primarily about were there any special topics as far as DCA presentations, any special topics that are outside of the QAP or any QAP changes for which the changes are not self-evident or there's really something worth diving in more specifically. And these are primarily, many of them will be related to the 9% round, but all things related to the QAP and the tax credit program are fair game for questions. And of course, we will be posting these slides to the website, but maybe, depending on discussion goes, we may make some updates. So the big takeaway here, I won't get into much, but is, as Jill already stated this. We want the people to be able to speak verbally, comfortably, because that will help the discussion. But of course, when we're publicizing guidance, it requires more than one individual's take to confirm for sure that that's the Q&A, public, what we want to post on the DCA website. So while this will be recorded for purposes of application review, if the only source of information that you're thinking of for a particular application question is something that was stated verbally in the workshop, you should submit that Q&A and we will make sure it's addressed written. And that is the guidance that we will reference for purposes of the competitive round. And further, we'll be watching for, obviously this is experimental. Last year we did not record, and to the extent in the future we continue to hold, even post-pandemic, anything virtual. We will, of course, be considering whether participation was lower this year and, considering that in the future. So if you were thinking of logging off and checking out the recording later, or you're too nervous to participate, knowing that you will be on the record, let's all relax and just have the dialogue and take advantage of all of these advantages of virtual, and hopefully we can continue to record with robust participation. And if you would like to participate, highly encourage you to unmute yourself and speak verbally. The dialogue is the great opportunity of the workshop relative to all the email communications and Q&A process. But of course, if your preference is to type your questions, feel free to do so in the chat box. All right, without further ado, we will pivot to presentations from the director's office. So just let me know when you want me to switch slides.
Awesome. Thanks, Jack. Hey, everyone. I'm Mitch Kelly. I'm a scoring round manager for the Office of Housing Finance. I'm not the director, but we don't have one, so I'm filling in today for that. So just a summary on our 2021 9% deals. It is crazy that it's been 9 months since the application submission deadline, but we are finally done with all of our reviews. Just a summary of the round, we received 67 applications this year, and of those 67, 30 were awarded. We did have 2 appeals, one of which was overturned by our appeal review committee, and one of which our appeal committee upheld our decision. And then, just in case you haven't seen or did not see our blast that was sent out last week or a couple weeks ago, our final select list, which was updated this month, is posted on our website. And whenever these slides get posted, there's a hyperlink there. But I also just want to say thank you to everyone that did submit an application. We saw a lot of great applications and it was a great round. So yeah, thank you. Next slide, Jack.
Thank you, Mitch. I'm going to take the bond portion of the slides today. So I believe in the beginning of January, Kyle's division, and I can't recall their official name right now, posted the 2022 private activity bond allocation for the state of Georgia. We received just under $1.2 billion this year. Next slide, please. And on this slide, you'll see the buckets for housing. As always, GHFA, which is mostly used for Georgia Dream and single family, receives the biggest allocation of PAB. So they received just north of $313 million, and they will use at least $250 million of that 313. IRFA received just around $96 million. To date, we have not booked any bond LODs or bonds against their bucket. And then the last bucket is local, which is where the balance of the state falls. We start the year with a measly $96 million. To date, we have already booked almost 84, but we have approximately 8 or 9 deals that have received their letter of determination. And I do believe, Mitch, you may know this number more accurately, they will encumber about 130. So we are preparing to ask for a transfer of funds, either from the commissioner's flex pool or from the balance of that GHFA single family line item. Next slide. So the team has made tremendous progress with regards to our queue or our pipeline. We are often asked to speak all around the country with regards to what happened 2 years ago, because many other states are now having the same predicament, and they want to kind of know what were the lessons learned from Georgia with regards to how we handled it 2 years ago. And there were basically 3 scenarios at that time that we contemplated with the executive team. Everybody knows how we landed. And the result was, I think, approximately 103 applications, many of which were put together at the very last minute. And required a lot of TLC to get us to this point 2 years later. In fact, I got a notice, I think yesterday, that Alabama is now having a supply demand issue for the first time ever. So anyway, to date, we have allocated 1 billion of the 1.6 billion. Previous slide, please, Jack. 1 billion of the 1.6 billion that was that we estimated it was going to take. 70 of the 84 applications are now in active review or have received a 42M letter. There are 14 2020 4% applications that have not submitted their full app. So we are meeting tomorrow afternoon as a team to determine the deadline for those 14 applications. Essentially, we would like to possibly deploy the rest of these bonds by the end of this year. So that leads into the next slide. So this is a summary of what we received. You heard me mention 104 applications. We did have a fallout of approximately 20 applications over the past couple of years. Currently, we have 2 deals from 2019 on the books, 16 from 2020 that have submitted their full application, and then the additional 14 that only have pre-apps. So a total of 33. And that, as you see, encumbers $617 million. So best case scenario, oh, let's see here. I jumped ahead a slide. Oh, go ahead. No, go ahead, Jack. It's okay. I'm sorry. So if you have received your 42M letter, please book your bond allocation as soon as possible. Like I said, we are preparing to transfer some funds so that you can do this. And there's that number. 11 deals have received the letter but have not booked. And if you plan to request more than you listed in your application, please let Mitch or me know. Several people are taking different paths when they increase their bond amount, and we would like a little bit more consistency with that process. So best case scenario, it is possible that we could deploy and fund the balance of that 600 million by the end of the year. If no economic development deals come in, if we're able to transfer the money from the GHFA single family portion as well as the current flex pool. And if that were to happen, we would likely start taking applications in Q4 of this year. But we also still understand that there are a lot of questions related to how a 4% competitive round will work. And so several of the topics that we have yet to iron out relate to, say, geographic pools. Are we going to mirror what's in the 9% round to the 4% round? There are some states where they use their 9% mostly for rural deals and 4% for more metro, larger deals. I'm not saying that's what we're prepared to do or proposing, but there are all sorts of things happening around the country, and we are trying to have our pulse, our finger on the pulse to make sure that we're doing something that will work for the state of Georgia. Of course, 95 or 96 million for IRFA or Invest Atlanta is not sufficient for the amount of need and building that's happening in the city, or Metro Atlanta for that matter. So that's something that we're discussing. The limitations, and I believe that was addressed in the QAP, qualification determinations. When should this happen? Should this happen year round? Should it happen during the 9% round? And how long should these determinations be good for? And then, of course, the timing of a pre-app full application process so that it does not overlap with the 9%, and that would free up staff to have a complementary scoring plan. If you have specific questions or maybe even some ideas, you're welcome to submit these in the Q&A process.
All right. Thanks, Jill. So the next topic we just want to briefly cover is the additional credit policy, which we published in April of last year. And then 2019 and 2020 deals were able to come in and apply for additional credits. Next slide, Jack. So just a summary of all the additional credit requests we did receive. We received 51 2019 or 2020 applications that submitted additional credit requests. DCA gave $7.7 million in additional credits. We have the minimum, the maximum, and the average. You can see, minimum was 10,000. The maximum award we gave was 383,000, and the average was about $147,000. So the penalty is in the additional credit policy, which is on the DCA website, but we just want to reiterate it. Each project team member who had ownership interest of at least 20% in the project is going to receive a penalty if that project came in for an additional credit request. And that penalty is 1.5 times the request. And we'll go into an example in the next slide. But just want to highlight that per the QAP, the maximum developer award limit for this year is $2.1 million, regardless of partnerships or however you want to structure your deals. That is the limitation, and that is before the penalty is established. And then lastly, DCA thinks it's important to be transparent about who came in for additional credit requests. We especially think it's important for any development companies, any of you that are thinking about partnering with other companies this year. We imagine that you would want to know what your partner's penalties were and structure your applications accordingly. So we will be working on that and hopefully within the next couple weeks come out with that list. So next slide, please. All right, so this is the example, and hopefully I can explain it well, and if I don't, feel free to ask me to reiterate or say it a different way. So again, per the QAP, the maximum developer credit amount is $2.1 million. So developer A, they say they requested a total of $100,000 in additional credits, $50,000 for one deal and $50,000 for a different deal. So their penalty, developer A's penalty in the 2022 9% round is going to be $150,000, which is 1.5 times the total request. Next slide, please. So the way that plays out is, again, the limit is $2.1 million, and you're going to subtract, or developer A is going to subtract $150,000 from that maximum. So it's going to come out to $1.95 million. So they can structure their applications however they want, but their limit is $1.95 million. And as you all probably know, DCA has the option to, but is not obligated to waive this limitation. So no one should expect that we will waive this limitation, although we do have the ability to do so. So, we're not going to tell anyone how to structure their deals or whether they're partnering or not partnering, but you all should consider this example when structuring your applications this year. Next slide.
We have a couple of slides coming up towards the end of this little session to address some emphasis updates for this upcoming season. But one of the big benefits of having emphasis will be the data at our fingertips and using the data to better inform some policy decisions, allocations, etc. Next slide, please. So with that said, some of the changes that we are anticipating relate to operating expenses. Ostensibly, and most people on this call tend to build the same property over and over and over, just in different locations and with some slightly different nuances. Ideally, our underwriting team would be able to pull, say, your last 5 deals and look at your per unit per annum operating expenses to make sure that your proposed development is in line and not too egregious or too much lower than what your actuals have been. So that's one thing that you can expect, a little bit better informed underwriting. Same thing with taxes and property assessments. We know that there are areas around the state where some of the counties and jurisdictions are just losing their mind with taxation. And as such, it's prudent for DCA to ensure that the property taxes reflected in the pro formas reflect what's happening in the area. So if you happen to be doing a deal or proposing an application in one of these areas, we will look at it with a fine-tooth comb to make sure the number is actually accurate and that the deal is still feasible with that increased tax amount. I know that's not desirable, but we don't want to see our properties in jeopardy financially by not being prudent. And then another thing that's come up quite a few times within the past year has to do with capacity. And capacity can mean a lot of things to a lot of different people. But we've observed some developer capacity related issues over the past few years. And when we're able to affirm that there is an issue, it is our responsibility to not further burden you as a developer. So just know that we are paying attention to these things. Capacity to us, of course, it could be financial capacity if you have the ability to carry a job or not. It could be your ability to get out of the gate and commence construction. It could be how long it's taking you to complete construction. There are all sorts of things that this data tells us. And when we identify it, like I said, as stewards of these programs, it's our responsibility to act.
All right, so I think Ryan talked a little bit about this last summer as we were having public hearings and listening sessions for the 2022 QAP, but we thought it was important to reiterate it. So as many of you know, or as you all know, we got rid of our project cost limit threshold section, which it will be great for areas with higher costs and really allow us to look at underwriting in a more holistic way. We just do want to remind you all about cost reasonableness. So our feasibility section does allow us to consider cost reasonableness, and it allows DCA to address costs that are unreasonably high. So if any costs are unreasonable and you realize that when you're putting together your application, or they're high, maybe I shouldn't say unreasonable. If your costs are very high, please make sure to provide extra supporting documentation or take advantage of the applicant comments where you can support or explain why there may be a very high line item. So DCA is not going to commit to, making any downward adjustments, but we certainly reserve the right to do so. So again, help us out. And if you expect that there's going to be any really high costs, just provide extra supporting documentation or reasoning for why that is.
Okay, so I think last year or within the past couple of years, we've talked about the 3 modules to which we subscribed. One is called IM&C, which is Investor Management and Controls. That is the one that most of you all use for development, underwriting, applications, etc. The other one is called Compliance and Asset Management, and the third module is Loan Servicing. For those of you that have GFA loans with DCA, you may or may not know that the servicing software we've used for the past many years is meant for single family. So it's not very agile. It's not meant for multifamily loans. It can't manage our reserves, etc. So this loan servicing module, which should kick off within the next 30 to 45 days, will be a game changer for DCA staff, but also for you all that are always having to do reconciliations to make sure we are accounting for your money to the penny. Next slide, please. So for the pre-app, here's the plan. The project narrative, checklist, and submission form will be completed within Emphasis. The home loan consent tab, relocation summary, those will be in Excel format still. And of course, forms will be uploaded through the software as well as like it was last year. For the full app, the project narrative, project information again, development team, threshold, and scoring will happen within Emphasis this year. The underwriting, which is the pro forma, revenues and expenses, sources and uses, that will still be collected via Excel, and many or all of these supplementary forms will be uploaded into the system like it was last year. So how can you go ahead and prepare for this? Next slide, please. Please do not wait until the last minute. Go ahead and create your account now. Do not wait until the last hour to start your application or submit your application. There was a major traffic jam at about 3:50 last year, but we were able to get information behind the scenes from the vendor to see who actually had started their application on time. So please do not do that again this year. If you have questions, email this address here and we can jump on those right away. And you'll see some of the other standard stuff that we always kind of include, like the project naming, and make sure that you use the correct application. We are in the middle of developing the pre-app, and we had left a box unchecked for a while. So many of you were able to see the application as we were creating it. But we have since unchecked that box. So if you think the application disappeared, it disappeared just for a few minutes or a few weeks. We'll put it back up shortly, and then you can officially start your pre-app. And then when the slideshow is posted to the website, you will be able to click that green link at the bottom to access the portal.
And I will say about the pre-app in Emphasis, like Jill said, we had it posted for a little bit, or our draft was posted. We appreciate your patience with this. We realize pre-app submission deadline is coming up. So we appreciate your patience as we are working very hard to get Emphasis up and running this year and do it in these phases that Jill discussed.
So for compliance and asset management, and Grace, you're welcome to speak up if you want. That was the first module that we onboarded. I would imagine that we are now about 90% done with that, with a bunch of small tweaks still to be made, but the majority of the lift has been done. So when we get questions from legislators, we're able to affirmatively answer information about our existing portfolio better than we ever have been able to do in the past. Grace, do you have anything you want to add?
Just to thank everyone for their patience as we have been working through getting all of the existing properties into Emphasis, and the team has been working very, very hard on that. If you have questions, again, that same email address that's on the screen is used for all emphasis related questions, whether it's for any of the 3 modules.
Thank you. And other things you can look forward to in the very near future. Pretty soon, you'll be able to pay your application fees, your allocation fees through the software. So no more paper checks. As well, if you do draws, if you have a GFA loan, you'll be able to submit your draws through the website. And then also many of our construction inspectors, as well as our compliance inspectors, will be using an app to do their inspections so that the data collected will be more consistent and the process will be much faster. So thank you.
Now, real quick, before we pivot to the next group of presenters, just had heard from the director's office. Do we have any questions for them before they walk off the stage and bring on the next presenter?
Well, Jack, in my mind, I would moonwalk.
You would moonwalk.
I was going to say speed walk.
When are we have a question in the chat box. When are the pre-applications due?
March 4th is our deadline. Friday, March 4th. So that's 2 weeks from this Friday. So it is coming up. So our goal.
Go for it.
Sorry, our goal is to have the emphasis pre-application and all relevant documents either posted to the website if they're supplementary documents or ready to go on emphasis by this Friday. So.
And all the deadlines should be at the end of core plan and the QAP. The pre-application deadlines and fee schedule, et cetera. A couple of tables there for pre-app phase and full app phase. So you should find all the deadlines listed in that portion of the QAP. Any other questions? The pre-app is up on the website now. Are you replacing that one?
Is it? I don't believe that. We'll look into that. Yeah.
So I believe you're referring to the distinction being the form versus the emphasis upload. Yes, we're just making so the questionnaire is on there.
Right now, all that's posted for 2022 for pre-application forms is the performance workbook. That is for the QD or the experience portion of our review. So that would be one of the supplementary forms that you would upload with the Excel portion of the pre-app workbook.
We have, in the case of waiver requests, that's an awful lot of lifting in a short period of time. And then just the comment correct. So if somebody said something that was correct, there is no cost waiver info posted this year. Is there a different process this year?
If you're referring to the cost waiver forms or any waiver forms, we are working to get that posted today.
Can you get a copy of the meeting recording as well? Yes, so the meeting is being recorded. This session and all the sessions will be posted to the DCA website. And just broadly, as we mentioned in the email for registrants and in the last email blast that went out, documents are continuing to be uploaded pre-app or full app related. So just monitoring that portion of the website. So Jill mentioned after receiving the letter of determination, the bond needs to be booked. What do you mean by that?
So after we issue your 42M letter or letter of determination, which means you've gone through all of the underwriting, we mean that you can go to what used to be the third floor if you were coming into the office, but you can submit your application with the bond team to reserve your bond funds. And it is at that time, no, you don't pay your allocation fee at that point, but that's what we mean. There is a cost associated with booking your bonds though. And this would of course only be eligible to those that have an application in queue. That is at the very, very, very end of underwriting.
So we just have the question for relocation waiver requests. When will the updated relocation manual be uploaded?
That will be posted today as well.
And so which of the breakout sessions will cover documentation of the construction costs that we all know will be high? Want to see what thoughts DCA has on this topic. So of course we have the breakout session related to construction costs. And I guess depending on the question, director's office, construction services, or underwriters would be able to, engage in that conversation. Does anyone want to correct me on that overview?
I would say that would be correct, especially because for a little bit of clarification, are you talking about the construction costs as related to cost reasonableness that Mitch just went over, or construction costs and relates to how it should be actually applied to or notated in the actual application? So depending on what question you have, once clarification is given, that would be the virtual session you definitely want to attend to be able to get that answered.
So yes, to the point of, if I may, in reinterpreting the question, as Sherry indicated, this being about the industry, like the current problems in the market, and therefore the basis of Mitch's cost reasonableness discussion. So that should go scratch what I said about construction services, underwriting, or Mitch did that presentation. So director's office would be appropriate. Correct?
I mean, you probably could ask variations of that question, yeah, to all of those teams. The underwriting team and the construction team would likely collaborate or work together to make sure that if there were high costs, that it was reasonable with the construction team. So you likely could ask a variation of that to either construction or feasibility.
For acquisition rehabs, is the scope of work with construction costs required for the pre-app?
So pre-application, and I'll go over this a little bit further in the construction services virtual session, pre-application is only going to be for those properties that are requesting any type of waivers for pre-application. So if you are requesting a waiver and you have a property that has some type of rehabilitation that will be included in the actual work scope, and you are asking for a waiver for something along with the rehabilitation of that property, or new construction, which does tend to happen as well, that would definitely, yes, require some type of architectural waiver, whether it be architectural, accessibility, amenity, and I'll make sure to go over that again in our construction services virtual session as well.
Is there a process for determining realness of projects taking up the approximate $300 million in bonds that are earmarked for allocation from pre-applications in early 2020 that have yet to submit full applications?
As far as we know, they're still coming in, but like Jill said earlier, we're going to meet tomorrow to determine what our plan of action is going to be for those 14 deals. Jill, I see you're also muted.
Yes. As I mentioned earlier, there were 3 strategies, solutions, options that we pondered 2 years ago. And of course, where we ended up, there were unintended consequences, of which we're fully aware. But yes, we do plan to close out as many of those 14 or 33 total applications still left to be funded this year if possible.
We have, will a waiver for rehab standards require a physical needs assessment with the pre-app this year?
Yes, if you are asking for a waiver for your property and your property again has rehabilitation in it, then you will need to do a physical needs assessment so we can have a support documentation for the reason why and the issue that you're actually requesting your waiver for. And that physical needs assessment basically gives us that backup documentation for if we would be able to provide a good determination for you and the reason for the actual request. It provides the verification or confirmation for that also.
In 2 weeks, question mark.
So, and correct me if I'm wrong, our QAP has been out for a while, and that has always been something that we've actually asked for whenever we've had a request waiver, a rehab waiver come in. Now, don't get me wrong, it also is going to be depending on what you're requesting. So a lot of the information regarding the Fannie Mae form is used from the physical needs assessment. So in our thought process, and then we can always go over this and kind of discuss as a team as well. But in our thought process, in order to provide that information, you have to get it from a physical needs assessment for your consultant to fill out the Fannie Mae form. So there should already actually be a report for that backup documentation. And we've always requested at least that Fannie Mae form in order to make sure that we're keeping the property within the affordable life period required for DCA.
To be clear, the language Sherry is referencing in the QAP is core plan submission requirements and award limitations, predeterminations and waivers. So under there, it lists what's required with the pre-application, adding on construction type. Any other questions? Would the RWS form also be required? I'm intentionally not parsing out what RWS stands for. Is there another team member who can answer this question? Oh, rehab work scope. Sherry, you're muted. Never mind, I got it.
So I think, sorry, I'm having some issues with my mute button. So RWS rehab scope of work or rehab work scope. Yes, a rehab work scope is required if you're asking for any type of waiver, architectural accessibility, especially if you're stating that the waiver is due to infeasibility or feasibility of the project. So we would need some backup documentation of your cost in order to assure for that infeasibility of providing whatever request you're asking for your waiver on.
All right. So continue to post your questions in the chat. If I don't see it, well, we got another one. Does the 1.5 times penalty from applying for additional credits apply to each individual on a project team, or does it apply only one time for the project team? For example, if there are 4 team members who were part of an additional credit app, and those same 4 people are team members on a 22 app, will the 1.5 penalty be applied 4 times for a 2022 app? I'm happy to respond to it if there's thing.
I saw the cloud bubble above Mitch's head, so I didn't know if he was going to unmute.
So I always find it harder when someone else reads the question. So as one just read it, what I can clarify when we were in the big recap from our discussions around this is there's not a change in how this policy was ever applied from the team that's conducting this review during the round. It's the same language from the QAP, which would look at an individual, I believe developer is the term that's used. So we're looking at an individual entity and in confirming at the end, based on awards, apps, how that's all going, just for that development entity, are they exceeding this cap? So that's the scope of analysis at any one time is related to one development company. Of course, other members of the team would want to know that info for purposes of seeing what limits their partners are facing, and that's why we'll be publishing that list. Can we confirm we're comfortable with? Okay, great.
That was much better than my answer would have been, Jack, so thank you.
Oh, all good, all good. Everyone's got to hear. Best when people can hear things twice and from different people. We'll all say it different ways. Let's see. So what that means. Will there be discussion about changes to the environmental assessment manual in today's workshop? And if so, when and in which breakout session? So that would be in the development compliance requirements section. And I will say, see if it should be uploaded now, but we did post an updated version of the doc that includes certain topics that elaborate on, for certain groups, it may not be immediately self-evident from the title what they cover. Say, if a particular team looks at a scoring topic that's not related to their baseline core responsibilities. So hopefully we can get that up to the website. That was the basis of the technical issue earlier, which I take responsibility for. Thought it would be helpful, but it clearly caused an issue. But the answer to your question, which breakout session can I go to ask about environmental requirements? That is development federal compliance. For a rehab, oh, we got a thumbs up from an unknown user. Okay, didn't know if that was a DCA response. For a rehab, waivers are often on existing conditions that can't be altered. For example, ceiling height that wouldn't be in a PCNA. Will a PCNA be required for those types of waivers? Also, when will the manuals be posted so we can determine which waivers may be required?
So for the manuals, we're looking at getting those posted this Friday for everybody to be able to go over and review. It's going to be very similar to the 2021 manuals that you have for architectural, and that would include the rehab guide, the accessibility, amenities, and submission requirements. As for ceilings, we've always wanted to make sure we're just in the know when it comes to ceilings, which is why we do make sure that we still ask that as a waiver, architectural waiver. At PCNA, I do understand where you're coming from as far as that's not going to technically be in a ceiling height. I do understand where you're coming from, where that's technically not part of the P&A, but it does at least give us the structure and the foundation of the system and the building. And a lot of times, or at least sometimes, depending on how old the property is, that could also need some type of rehab or some type of warranty or replacement. So we would still ask for the P&A. And then if not the P&A for just that request, and that's your only request, just make sure you include that in your supporting documentation. And hopefully y'all are still going to be in my construction session too, so I can provide more information as well.
Any other questions? So for rehab that, let's say a bed, for rehab with bedroom, I'll just read as it. So for a rehab that, let's say a bedroom is 2 square feet too small based on current standards, you must have a P&A to request a waiver for this. These have been approved for over a decade without a P&A at pre-application.
Now, we're not saying that we're not approving. What we're saying is that we do want to make sure that for a lot of the waivers that have been requested, we have had to reach back out in order to get a P&A in order to provide a determination. And this year, what we're wanting to do, or at least trying to do, is provide basically a way to not have to go through all of the back and forth. I know one thing that probably everybody understands as frustration is the communication and delay of communication. So by making sure you're aware of everything that's needed up front, we can at least know that you're prepared in case we do have to request if you're asking for any additional waivers. So always we have been there when it comes to actually making sense and a reasonable response when it comes to your supporting documentation that you provide us. But what I don't want to happen, and I think that's us as a team, is for us to continue a process where we're not providing you that upfront need, and when you're asking for something additional. So see, the ceiling height and the minimum square unit, I think, is always something we've been very reasonable on. But if you're adding additional waivers on top of that, that's where we've had some issues of asking for additional documentation and not having that available during the pre-application phase. So right now, we're really just trying to catch up with getting everything we need up front, and so that you're aware up front and not having an issue where we're told that we didn't let anybody know ahead of time of what they needed to be prepared for. Hopefully that kind of answers that question for everybody.
All right. I believe Sandy's next up. Shall I pull up share my screen for post-award clarifications?
Yes, please. Hi,
Deal.
everyone. I am Sandy Wyckoff. I am the tax credit manager here at the agency. Just recently, we've been getting a lot of requests for extensions. So do you have the slides, Jack?
Yes, I am. Just pivoting the QAP up. Okay.
No problem.
Whoops. I apologize.
But I can speak. But as
Go.
I was saying, we've been getting a lot of requests for extensions. And I know last year, the IRS put out some guidance about if you were needing a 10% test or a placed in service extension because of the pandemic, then you needed to send a request to the agency and we had to give approval. Well, they gave out IRS gave out new guidance last month. And so the extensions are automatic now that they put out. I am not going to read them, but I do have them on the slides. You can next slide, Jack. So the first slide is about the 10% test, and then the next two slides are about the placed in service. So what I'm going to tell you is that, if you're unsure about what your deadline is for your 10% test or your placed in service date, and you need some clarification, please send me an email and we'll get that answer for you. There are some other extensions that do require DCA's approval, and that is the last slide I have, Jack, where it says other extensions require DCA approval. Next one, there we go. So we've got the final application for 8609s, 4% application and loan closing, construction, and GFA loans. Any type of extensions as it relates to those, you still need to submit a request to the appropriate person. I think I've listed their email address next to the topic. So if you have any questions about anything as it relates to extensions, especially underwriting, placed in service, 10% test, 8609s, then you can contact me. Thank you.
Do we have any questions related to Sandy presented on? Look like it. All right. So we will now roll into clarifying some items related to what's in the QAP, threshold and scoring, but starting off with some questions related to home planning. So those of you may recall during the 22 QAP development public forums discussion around how broad were we wanting these preservation set-asides to go, and part of that involved some set-asides that are not baked into the round by default, but would occur separately. One example of that, and it's mentioned in the QAP, the naturally occurring affordable housing set-aside, that would be for home and 9% credits. That is under development, and we do expect, we are still planning to do that. And similar deal for Choto. The QAP language now indicates that would be, that it involves a separate release, notice of availability of funds, also with home and 9% credits. And also we've gotten some questions about where does, we discussed USDA preservation, but that didn't make it into the final QAP. And this is, when we referenced it as such, and the NOFA is under development, but we are still planning to do that, but that would be with home only. And that was just based on the results of public discussions around how might we best consider, for which developments these resources versus throwing everything into the set-asides in the competitive round by default. We also wanted to open this up to, we've gotten an increase in requests regarding home funding from development partners seeking home funding. And so we wanted to reopen up the question of, a year ago, we heard obviously about how bad the changes in the industry were related to higher costs, and released an additional credits policy based on that. And we wanted to basically open up that we are anticipating having availability in addition to the NOFAs that I just discussed on the previous slide. We anticipate having availability of home funding to be able to, address a targeted need related to whatever our partners are seeing in the environment. And we wanted to take a moment to open this up. So we plan to release a survey to inform this, to get a sense for what development partners would find most useful for how we could target such a NOFA to respond to provide home in the best way possible. The boundaries around this would be, how's it related to the DCA portfolio? specifically. So are you experiencing issues where you feel like the current QAP is not setting you up well enough to, you would want more than just what the tax credit limitations apply based on, say, cost increases you're continuing to face, even based on the opportunities we put out last year with additional credits? Or are you a development that's been awarded but you've not yet placed in service, encountering issues? Or is you an existing DCA property? We want to open this up for a second, and I will stop sharing screen for a second. The rationale here being, we're going to release a survey about this, but we thought we could take a moment in this forum, because the surveys are best tailored to getting the right information if we have some amount of preliminary info. So if anyone has any comments on related to what I discussed, our intent here with opening up a separate NOFA to assist applications or previous awards or those in the DCA portfolio already about issues or ways we should consider structuring this NOFA, we'll consider that as we put together this survey that will then be disseminated. So does anybody have any thoughts they want to speak to regarding this question? And feel free to fill in additional context for those who have been involved in these discussions if you'd like. All right. So that is all fine and good. We will have the survey then, indeed, and you can look forward to further communications related to that. Okay. I believe we have next up, we've got another 15 minutes or so before we take a break and pivot to small group sessions. So we will.
Before you move on, I would like our partners and everybody on this call to know that we hear you and we understand that there are some gaps that are existing. And so I implore you, when the survey comes out later this week, to please give us your true and honest feedback about what the needs are so that we can make sure we tailor the NOFA to meet at least 80% of, the 80-20 rule. So definitely, please help us help you.
Definitely, thank you. So we have another 15 minutes, so we'll still stick to the break for everybody's purposes. We'll be able to speak better if there's some mental respite baked into this, but also then pivot to the small group sessions, and some of these presentations will pick up on the other end of that. So have Relocation Team up next.
Thanks, Jack. I'm going to be real quick since we only have 15 minutes left. First of all, Miranda James has joined our team, which we're really excited about. So she's offered a lot of input with regards to just compliance from her experience and things like that. So that's been awesome. As Jill mentioned, in the pre-application Excel workbook, we've included a relocation tab. Don't worry, it's going to be just an overview of who is getting relocated. Also talking about the tenancy. So if it's a commercial location, single family home, or a multifamily. Also, it is for all relocation. So it is not a waiver. This is not the waiver document. So that is separate if you plan to do permanent displacement. So we'll talk about that more in our breakout session if you have more questions. And we've also put together toolkits based on these 4 different groups in order to help you focus your efforts if you do have relocation. So those tools will be out by the end of the week on the website. And so if you have any questions, reach out to us at Relocation Review. And that is it. So thanks so much for your time.
Good deal. Thank you, Alana. Do we have any questions? I can see the chat now. Any questions for the Relocation Team while they're up? And of course, one of the breakout sessions is dedicated to relocation. All right. Next up, we have highlights from scoring. Megan, whenever you're ready.
Hello. So I'm going to be talking about actually specifically just one new scoring subsection today. Jack, if you could go to the next slide. So in quality education areas, we have a new scoring option, option C. This looks at the longer term CCRPI growth from 2015 through 2019. Go to the next slide, please. So there are two conditions which must be met for schools to qualify under option C. I do want to begin by saying that qualifying under option C does not mean that you necessarily are eligible for points. Schools must still meet all of the baseline requirements that are listed at the top of the section in the QAP. For instance, schools cannot conduct student admission on a selective basis. So the first condition under option C is positive average year-over-year change. So we look at the average of the school's CCRPI score changes from 2015 to 2016, 2016 to 2017, and 2018 to 2019, and then get the average of those three changes. Changes between 2017 and 2018 are not included in this calculation, as there was a methodology change in CCRPI between 2017 and 2018. So these 2-year scores are not comparable. So we leave out that time frame, and you just have these 3 different time frames. The second condition is the average CCRPI score is in the top 75% of all statewide scores for the grade cluster in the years indicated. So expand on that a bit. So we are looking at the average from 2015 to 2019. However, we exclude from this calculation years which are not included in the year-over-year change calculation. So say, for instance, you have a school with 2015, 2016, 2017, and 2018 CCRPI scores. We would be able to calculate the change from 2015 to 2016 and 2016 to 2017. However, we cannot calculate the change from 2017 to 2018 because they're not comparable. So we would only be including 2015, 16, and 17 in the year-over-year change calculation. Therefore, we would only be including 2015, 16, and 17 in the average CCRPI score. So I do have a demo that I can go through. However, Jack, I don't know where we are timing-wise. Jack, if you're speaking, you're muted.
Yep. I do the thing we all do. We speak when we're not muted. I mean, when we are muted. Yes, agree with the instinct there. In the interest of time, can probably proceed. So so this was going to be an opportunity to kill 2 birds with 1 stone. During the workshop, Megan recorded a tutorial walking through an example of this, but I think we can certainly do that and still post that portion to the DCA website. The key thing that we can say about that, for any questions, of course, go to to Megan's small group. That's the policy initiatives in scoring. I will detail more specifically in the 7 minutes when we pivot about how to get there, walk everyone through the doc. But the key thing I want to highlight about what Megan just talked about is you don't have to do any math in the vast majority of cases. We have posted the data set that does that math for you. The key things is that, as the instruction document indicates, there are some instances in which the underlying Department of Education data, due to primarily the way a school's label may have changed from one year to the next, or their identifier, there are in certain instances where our spreadsheet looking at changes from 2015 to 2019 may not capture that a school is eligible. So this is really to say you can just use that website, but if you're already working with the school, you're familiar with the school circumstances, and identify that you think that the spreadsheet that the scores should qualify them, that you can submit that through the Q&A process, and we can make any updates to the documents posted on the website. But in the vast majority of cases, we've confirmed it's just in the spreadsheet online, which we'll be walking through. There's a workbook table or a worksheet that just has it qualifies or not. In most cases, that's sufficient. You need to dig deeper. The second spreadsheet shows what's underneath that formula, but I'm not asking you to do all that math. So I know you had, yes, in the remainder of your slides were just, where's the option C dataset posted? Can you provide a link? So in the registration email to registrants yesterday, it's in the same section of the QAP workshop documents. So this is perhaps a good time to pivot. We stated under the workshop, there's certain documents we posted to help people be able to look at that as reference during any discussion today. So it's on the same website underneath the agenda where you saw this. And it is the following documents can be referenced for key workshop discussion. Why don't I just share my screen as long as I have the floor? I can say two things related to this. So we all see this.
Yes.
Yes. So this is the 22 QAP and related documents page. For those who received an email from us after registering, how to get here, it took you to this web page. So here's all materials that may be helpful for viewing just alongside a discussion. In most cases, these other ones, it's largely the same as what it was a year before, but we're posting for your ability to see it. But the answer here is quality education areas, scoring instructions, and option C scoring data. But again, Megan will be walking through a tutorial, and we can post that tutorial to the website. Further, in recognizing 4 minutes before a break and then pivoting, so from my testing, it does appear the upload has worked, so you should be able to download. Oh goodness, I just downloaded a version a moment ago, and it worked. Let's just to ensure. Why don't I walk through? Apologies all. We made a tweak to clarify. We'll see if we can get that fixed during this break, I would say. But I did test while the presentation was going on, and it seemed to work. But we will have a column clarifying certain scoring, certain additional topics for which a group, if it's not self-evident in their station topic. But all extra info, of course, if we were all in person, we would just be walking around talking to people. So based on the one title stated. So where's the option C data? Oh, that was the last one. And we have a few minutes. What I can say is, let's see about important ones to call out from that. I'll take a couple of minutes and just verbally state. And if I read out a topic, again, hopefully you can get it on the website. But if I'll read out a topic, and you can jot down which station will cover this additional special topic. Okay. So first would be, if at the end of all this, you're unsure of where you should go, start with director's office or QAP manager stations. Those will be a good starting point. We'll be able to direct you to the right place or handle it if you're not sure where else it should go. 4% tax-exempt bonds program questions. You should go to the director's office. For the new minority and women-owned business engagement scoring section, you should go to the director's office. For desirable and undesirable activities, as well as community transportation options, you should go to compliance and asset management. For deeper targeting / rent and income restrictions, mixed income development, or favorable financing, you should go to the underwriting group. That is my timer to pivot. For the development federal compliance, this group will cover environmental requirements, historic preservation, Davis-Bacon, Section 3, and any questions related to federal requirements pertaining to minority-owned business enterprises, MIWI, as is referred, or women-owned business enterprises, but just the federal requirements component. Again, for the scoring section related to engaging minority and women-owned businesses, go to Director's Office. If you have questions related to implementing 811, this is separate from application, but just on the other end, you have a property placed in service and questions related to contracting, etc. We are lucky to have one of our relocation specialists used to be very deeply involved in that program. So related to 811 implementation, you can go to relocation. For the following scoring sections, you can come to the QAP manager station. It's internet access, preservation set-asides, integrated supportive housing, enriched property services, as well as for any questions related to scoring related to the bond program, say the applicability of a particular scoring section for 4% versus 9% and interpreting that, can come to the QAP manager station. For policy initiatives and scoring, they will specifically be covering quality education areas, revitalization and redevelopment, community transformation, stable communities, community designations, previous projects, phased development, DCA community initiatives. So a couple minutes passed. I apologize that did not go up to the website by default. We didn't provide that last year, didn't hear anything about it, but then it occurred to us that could be helpful. So hopefully the website will update and you'll have that reference, but does anyone need me to repeat one or have any questions about what I just, that overview? Oh, okay. Thank you, Megan. So if you, all registrants have been emailed the correct agenda and virtual access information document as well. So actually, I'll just have a couple more minutes to hear me speak, and you should have that for reference. Good deal. Okay.
Chad, can you repeat where integrated supportive housing will be?
That is in QAP manager station with me. So, and as you confirmed, have you registered, received document from Megan with the updated document? So we can attempt resending over the next time. Is could you, if you received an updated agenda that includes those special topics, could you confirm verbally or in the chat for Megan? Otherwise, we can try resending to all those who registered. Otherwise, yes. Okay. Thank you. So received. Appreciate it. And to the question of can we post it? Yeah, yes, we have posted it. I think the question is just a lag in having it uploaded. So I will give us our 12 minutes of mental respite. Thank you everybody for your patience, and looking forward to the chat, and we will pick up on the other end of this. So 12-minute break, hour of small group sessions, 15-minute break, pick up again in the large group. Enjoy your small group discussions and brief mental respite.